Welcome to Simplified Profits, ladies and gentlemen. This is Anthony with over 23 years of experience in the market, and we are going to do a real quick market update. Hopefully, get through this pretty quickly. We're going to start off with the monthly charts. As you can see, the Dow Jones, we're starting to hopefully get a pullback in some of these monthly charts, which will make the daily charts look ugly, but sometimes it's good to have a healthy pullback. So if you look at the weekly, it is actually oversold on the Dow Jones. So we could have possibly a green week on Dow next week. We could see a little bounce on those weekly charts on the Dow Jones, daily charts. As far as that is concerned, I believe, it is struggling at that 100-day moving average. Not really struggling, but you can see it. It had a good trend going, and it just broke down. And kind of came down. It passed through the 50-day moving average, which is why I have the 100-day moving average up on a lot of these. So I would like to see the market test the 200-day moving average, and basically in all the major indexes, and go from there. It'd be nice to have. It's rare to not see pullbacks as long as we did from November up until just this month. I mean, the market, especially, let's jump in SPY, but right now we're playing it very, very cautious. I'll kind of show you where we are as far. I think right now we're up about 24% for the year, beating all the indexes by 17% or so. And we, hoping to have 60+% by the end of the year. We'll see how things go. But we did trade a little pullback in SMH, and we'll kind of show you how that went, and we'll show you the performance of the transparent account, which is the only thing we're going to be showing on that account. It's just a performance page. It's not going to show the capital in it or anything like that like we were before. You can always play around with a compound interest calculator, as we did a few videos back, just to kind of show you how putting 20% of your money into your brokerage account and stacking compound interest over the long term kind of plays out. Check that video out. But Dow Jones, the 20-day moving average on the daily, you met plus the 100-day, which the 20-day moving average is this middle line on the Bollinger Band. And now here, it's going to cross down under the 100. I probably already did the 50. Let's put the 50 up here and see. And what people call that is a death cross, which I don't pay any attention to that crap. You can. I just don't. I try to keep trading real simple. There's a million different things you can. Right here, this is just a ton of indicators. There's a ton of channels. And I've studied them all from A to Z on every ticker from A to Z for years. And this is all I use. Keep my charts pretty clean. But that could struggle with the 20-day moving average. The weekly chart, we could see a weekly chart. There's a lot of coulds here because nobody knows what's going to happen. All right, you look at the charts as almost investor psychology 101 is what I like to call it. The Dow Jones, it only went up 10% last year, where SPY went up 20, Qs went up 50, and semiconductors were up 70. So, we'll probably see the least amount of movement in the Dow as usual. SPY, we're looking at the same thing here. It's touching that 20-day moving average. It's already crossed under the 50. And let's see where the 100 is. And it did bounce off the 100-day. So we'll see what happens. We could see that kind of bounce back up. But looking at the weekly chart on this, the weekly chart on SPY still got some room to pull back. We could see it touch, 480 range, which would be a good area to test. Right now, you see that 20-day moving average on the weekly kind of holding up. But as you can see, when weekly charts pull back, you have up weeks, you got down weeks. The daily charts are going to swing. The weekly charts are going to swing. The monthly charts are going to swing. And even from the 5-minute, 1 minute, all the way up to hour charts, everything swings. Just pay attention to it and watch. And this is the monthly chart on SPY. So at 480 range, will be right around here. So we could see a couple red months. And, it would be good. It'd be healthy. I wouldn't mind seeing that touch, the 20-day on the um, on the monthly chart. That 480 range would probably be a pretty good, strong support. Now here on the daily, once again, by the time it pulls back, that 200 may get caught up to that 480 range. So once again, I'd like to see it test the 200-day moving average on the daily. We're being very, very cautious this year, ladies and gentlemen. Things are just crazy. It's crazy all over the globe. I mean, if you look at what's going on in our country alone, and honestly, I think things are going to heat up quickly this spring and summer, especially in this election year. I mean, now here, that may not feed that much over into the stock market. It just depends on how crazy it gets. But I think inflation is going to be sticky. It's going to continue to go up. I don't think we're going to see any rate cuts this year. I think the Fed might have to raise rates. And GDP is slowing down. So you could really see some crazy things happen fundamentally. And no telling how many terrorists are in our country and other countries. I mean, things are getting pretty crazy out there, ladies and gentlemen. So stay cautious and watch the charts. So I would like to see the 480 range, 200-day moving average kind of touch there. And remember, you don't have to overtrade. You don't always have to be trading. In the market right now, we're cash. We exited. I have to pull up the chart, which I will here in a minute, and we'll get to our last trade, which was the semiconductor ETF, the leverage version of that, obviously. And this is the Qs. So once again, they all are looking about the same, right? Testing that 20-day on the daily, right around that 100-day moving average. I would like to see that 200-day moving average hit. Now the weekly chart on the triple Qs, that may only take a couple more red weeks to kind of get oversold. If it touches that bottom Bollinger Band on the Qs, I think that would be on the weekly. I think that would be good time to start scaling in. Let's see, where was that? Let's say about the 400 area. Let's look at the monthly. So 400 area, yeah, that'd be that breakout area too. So yeah, I wouldn't mind seeing that pull back. Now keep in mind the monthly chart. Look how long it's taken for the Qs to pull back on the monthly. Jeez, oh peace, to oversold. Technology sector has been crushing it. So let's take a look at that. In SPY, you've had now the bottom Bollinger Band definitely would have bought. So those didn't pull all the way back to the oversold. But when it does pull back to the oversold on the monthly, ladies and gentlemen, that's a good opportunity to just load the boat. Let's see here. Where was we? Triple Qs. So I would like to see, I doubt we'll get another oversold pullback on that. I would like to see that 400 range tested and really hold. So you could be seeing another 7% pullback on that, 6% pullback in the Qs over the next month. But you never know. I mean, we could see another. I mean, this is crazy times right here. So we could see another pullback. Just always have cash flow, which is what we teach and preach here. I'm having cash flow to manage that position. And this is the semiconductor ETF. I mean, that candle right there kind of told you, people were jumping out of semiconductors. We had a red month. It was a big red month. And we'll look at that daily chart here in a second. Actually, let's do it now. So it got oversold right around here. Now we actually, and you'll see this in the performance chart because it looks like a freaking V. I mean, at one point we were tied with what the market was. That's what happens when you get in leverage ETFs. They go down as quicker than the regular ETF. So you can lose capital. You just got to have patience. You got to get your emotions out of it. But we entered here. I thought this thing was going to kind of do let's see here. If you put a line right there, I thought we were going to go back up and retest those highs, or we were going to break down, which is what it ended up doing. I mean, long haul semiconductors, I mean, if you look at the growth of technology, yeah, people might be start buying less cars, stuff like that. But there's still companies that are investing in semiconductors because they're growing technology. Um, so over the next 10 years, it wouldn't have phased me to average my position lower for the rest of the year. Like it wouldn't have been a thing. As you know, we're putting 20% of our income in the account every payday, but we basically had to average down continually 3 days straight. And then we locked in profits. It wasn't much. But it's been a weird April. The beginning of April, geez, what were we in? I'd have to go back and look. Took a few losses in the beginning of April. We were up 35% last month for the year, which was 11% a month. We were way ahead of our goal. And I took some risk. I'd have to go back and look, honestly. But I knew what I was risking. I knew what I'd jump out and basically, cut losses, which I hate doing. I don't believe in it, but sometimes you take a risk, especially when you have a little extra percentage in your portfolio to play with. Sometimes you can take risk to pay off really well, but just have a stop loss set, which is really something I don't believe in, because once you're okay with taking losses all the time, you're just constantly taking losses, and your losses overweigh your gains, and your portfolio's crap. So don't do that. But this was our trade, end of April. And like I said, you'll see that when I show you the performance screenshot of our account. And it looks like a straight V. So semiconductors, let's look at this real quick. So the 20-day moving average on the weeklies kind of held up. I would like to see it oversold on the weekly. I mean, this thing is pretty extended. I doubt we'll see the 160 area. I mean, unless some really bad news. I mean, that'd be another 17% drop to pull down to that breakout area. Keep in mind, that was just that rally broke out in December. So that was a pretty big gain. So people do have, some pretty good gains to lock in if they wanted to and move to another sector, depending on what they think, who knows. But that weekly chart was a huge sell-off. Have people load the boat back up a little bit, and we'll see what next week brings. Like I said, I'd like to see the weekly get oversold. I'd like to still see this daily tested 200-day moving average, which would be right around that 180. Where was we on the weekly? 180. So 180 be right around that area. Over the next couple weeks, depending on how that Bollinger Band comes together, oversold condition may land it at the bottom Bollinger Band, which would be a green light for me to trade on the weekly chart. Now gold, it has been a monster. I'm half tempted to go in on gold. There's really not many leverage gold unless you get into the miners that I prefer to trade. But if things do get crazier this year, which I don't see any common forces, I don't see any, world leaders calming anything down. And that's when things spiral out of control, right? I mean, just think about that in the whole, any type of environment. If you don't have a strong leader keeping things in line, most of the time people take advantage of it and things spiral out of control. So gold, it's a little dip in gold. I'd like to see it hit the bottom Bollinger Band, but it might not. It's oversold, holding that 20. And it may be a good bounce up, especially if you think the dollar's not going to hold up. And that may be where this gold has got its run, especially with a lot of geopolitical crap going on, inflation, rates. It's really a good hedge. I'm not a fan of investing in gold. Now I do own a little bit of, gold bars, silver bars, coins, and stuff like that. just because, but I've been buying those over the years for as long as I can remember. So that definitely keep my eye on that. Small caps. Um, yeah, I don't know. I don't really. I like good companies, mega caps. I don't really deal with the small caps. I wouldn't really touch them. Like I've always said, most of everything I trade is either an S&P 500 or high cap 1000, but it looks like the same with everything else. I think this will actually struggle here and pull back. Is getting close to the 200-day moving average. And if you know anything, that once it drops under the 200-day moving average, we don't touch it. Now, if something breaks the 200-day moving average on the daily, but it's under on the weekly and we're trading based on the weekly chart, then maybe. But if you look at this, the 200-day, I mean, it may fail on the weekly chart as well. You might. So for me to touch small caps, I'd have to see this pull. I'd have to see the monthly chart pull back to this area right here, oversold area, right around that 100-day moving average. Let's see where the 50-day moving average is. Yeah, I'd like to see the monthly chart oversold. I may trade on the monthly chart if it gets oversold. So yeah, 50 days right there, along with that 20. That'd be the only way I touch small caps. Let's look at XOP. I tell you one thing, bought more of, not in our transparent or account or anything like that, but cannabis ETF may be worth loading up on here. That's a sector that I think is just, it's getting legal in more states for recreational uses. My personal opinion is you put a weed bar and a alcohol bar side by side, where you think you're going to have most problems out of. If people actually smoked weed, I'm not promoting it like that, but if people actually smoked it over drinking, you'd have way less domestic violence, way less, just all types of stuff, way less. I mean, alcohol is a leading cause of, domestic violence, rape, all types of stuff like that. But that is one oversold. Keep an eye on. XOP could definitely be a play here. I know a lot of people are, if you listen to any of these other CNBC, MSNBC, a lot of people like the cash strap, oil and gas exploration and production companies. I think MPCs, yeah, I mean, that might be a good buy actually, right there. Yeah, honestly, I need to add that to something. I'm glad I seen that. Yeah, I may be adding that to an account or two. I know they pay a decent dividend. We'll see. We'll see what happens with that. But XOP in general, hit oversold, bounce back, which we said in one of the recent videos we did, expected that bounce out of the oversold. Weekly, started pulling back. Whether or not we'll see some red weeks to come, because that is, looking at that weekly chart. That's why you always got to look at every time frame, ladies and gentlemen, on anything you're trying to buy. Now, weekly, obviously, you don't have to look at as much as your daily. Same with the monthly, because every bar is a week, every bar is a month. But that's going to be some tough resistance right there. So, yeah, we'll see what happens with XOP right around there. That'll be interesting. I think it probably should pull back to that 50-day moving average to build up a little more strength and then break out. But if it breaks up past that, you could see a nice little rip. And that could happen sooner rather than later. But it did kind of look weak right there. So, yeah, I would say a little consolidation would probably be a good thing, and then break out past that on the weekly. Looking at the daily. Yeah, right. I mean, obviously, if it broke out past that, that would be your next resistance. So just keep an eye on them. You look at the monthly yet? No, it's the quarterly. Monthly chart. Yeah, I mean, they got some room to run still. Definitely got some room to run still. Heck, I think those days, we were Obama years, I think. Um, yeah, that could break out. It could be a good trade. Keep your eye on that. It's nothing I'm really big on. I don't really trade oil or oil exploration much. USO, this is your oil ETF. I mean, this is probably about the same. This is probably, look at your weekly. It's probably got the same resistance levels just about as your explorers. So yeah, I would like to see that pull back a little bit. Maybe that 20-day on the weekly and then bust up through there. Actually, I mean, I hope it doesn't because I buy gas like most people. That'd be bad for inflation too. Um, but I don't see it dipping or pulling back anytime soon, honestly, like too much. You probably get a new trading range in this Bollinger Band heading sideways for some consolidation, then a breakup would be my guess. All right, let me pull up this performance chart. This is our transparent account right here, ladies and gentlemen. This is where we're sitting. This is that SOXL trade I was saying. So you can see January we had 7.32%. February we lost a little bit. Bounced back up in March, crushing it. And this was just a trade that we were in that was under. We were scaling in, and it recovered. It's kind of why you keep cash flow to manage positions. And we're down 7% in April. But hey, I'm hoping May has a month like March. And when this market, to be honest, we're usually up way more than this. That's usually when the market is swinging normally and there's not crazy crap going on all around the world. So we're in a weird time, so to speak, weird year. But when things are just common years, common swing trading, I mean, it's easy. It's just rinse and repeat over and over and over. Sometimes this is like happens every 2 months. That's what I'm. We'll see. I'll keep posting this, but I'm not going to post any more balances or anything like that as far as a transparent account goes. Heck, I just posted this and had to edit it out because I forgot my account number there. So yeah, I will keep posting the performance of that account, but I'm not going to keep. I'm not going to be posting anything else. I really don't want to put my financial information out there like that. Other than that, that's it, ladies and gentlemen. If you ain't picked a book up, Simplify